Right, see, now this reminds us of the first time that Pat and I got on. The very first YouTube
Oh
live
my
stream
Lord.
we did was,
God, bring back old memories.
yeah, it was Pat fixed his mic and then his camera disappeared. And then I got my camera going and my mic disappeared. And we just got rolling and rolling. But welcome anyway to our millions and millions of viewers. And Jackie, you're with Century 21 Foothills, great?
I am. Yes, I am, Rick.
And you're brand new.
Right. Just started.
How many years you been doing this?
Oh my Lord. Well, since you guys call me your senior analyst, it'll be 33 years in August.
You started when you were 10.
You look at the gray hair, you can tell.
Now, we actually try to refer to you as our senior research analyst because you're our only research analyst. And the reason we do that is on one of our shows, we were thinking we were going to have to look something up, and you were right there and you were feeding us numbers. So we decided, well, she's
Let's cut to the chase. Our ratings were going down. We needed bringing a pretty woman to prop it up. Let's cut to the chase. It wasn't.
I don't know if I just helped or made it worse though.
Oh, well,
we'll see.
We'll see what happens because our audience is 80% male. So now I control the monitor here for comments. So, if anybody gets a little out of control here, I just won't let them on. So
if we don't invite you back next week and we know, how we felt.
But,
okay.
So for those of us that are just, for those of us that are just joining us, this is actually our first time having a guest on the show. So I'm a little excited about it and it should be fun. So what we're going to do is roll through some of our numbers here real quick. And the first thing I like to look at is our wonderful, wonderful 7-day moving average. And guess what, guys? Today we're officially over 6,000 units. We haven't been there since when?
A couple of years.
Yeah, it's been brutal. And Jacob, looking good, Jackie. So
we never get those kind of comments.
We don't. No, I don't get that at all. So
I blasted it to everybody I know. Some of my old clients are signing off.
Oh, okay. You rigged it. Okay, got it.
So on this thing, you can see, the red line is the number of homes that went under contract, and the blue line is the number of homes that have come on. And I kind of want to wait till Monday for this thing to level out because it's a 7-day moving average. And so it's going to have some Easter stuff in there. So it's just a dating game. Terry, we keep having you back. Be careful. So we need Easter to shake out like it did over here. And then we're going to be approaching Memorial Day. But there's definitely a trend out there where sales are dropping, but they're not dropping that much. We're down about 3,500 and we've been rocking and rolling about 3,900. And our listings are coming up, but ever so slowly. So are you feeling that out there, Jackie?
I am. I've got quite a few buyers I'm working with right now. Excuse me. Instead of the, 5, 10, 15, 20 offers, I try to talk to every agent prior to presenting an offer and get a feel for what they've got. And I'm starting to see, I'm still writing as is. We're still shortening inspection periods. We're still doing appraisal gaps. The appraisal gaps versus being 20, 30, they're running more like 5 or 10, maybe 12. So I'm seeing that shift, but it's very, very slow. And it's so slight that I don't think the consumer's really seeing it yet, especially in that first-time home buyer price point.
What are you seeing about inspections? Are people still kind of, is the buyer demand so much or the inventory so short that sellers or buyers are needing to waive inspections completely, or they kind of walking away from that?
We're doing as is, but we're still retaining inspection periods. Now, I just listed one the other day for $395, 40th Avenue in Peoria. And it's complete fix up, totally dated. The owner might be on. Hi, Brian, if you are. And we actually received multiple offers right off in the beginning. As is, no inspection. They didn't even see the house. There's still the tenant in there. So we got an offer for 405, 400, 400 on a 395, but as is, hard earnest deposit, no inspection period whatsoever. Signed the bins are right up front. So in that price point, it's still super crazy.
Yeah, and you're just lucky if you can find anything. So Pat, kind kind of a quiet week, or what are you seeing?
Yeah, it has. It's pretty much has been. I mean, let me roll here. This is the chart. This is actually 3-year chart. So once again, I can over dramatize or under dramatize stuff by showing the charts as far as a 1 year and a 3-year gap. But I mean, you've got right here. This is the 3-year. You can see right here. This is beginning, kind of the beginning of February, or middle of February. It's just been a staircase climb upward. This is actually the 10-year. But let me just pull it back here. Rates have been kind of hitting the top here at like 290, 291. So, I mean, we've been this staircase climb since the beginning of March, actually really going back farther than at the beginning of the year. So they're stabilizing. Right now, let me just pull up this right here. I'll show you, try to give you the inside scoop on the rates again.
Well, remember Realtor.com said we'd be at 3.67 by the end of the year.
Yeah, 3.6, 3.75. So they're actually pretty accurate on their projections, and that's
I think
why
they meant
you and I
end of the
don't
week.
believe any experts at
They need to
all.
pair up with Zillow.
Huh?
They need to pair up with Zillow.
Yeah, that's why. I mean, that's why I think Rick and I can do just as good of a job as anybody than these yahoos at Zillow or any these multi-million-dollar experts, because I have yet to see an expert that's actually ever right. So
Well, we're just going to call our spitball research company. So,
well, we do just as damn good of a job as they can. So matter of fact, I think if I recall, remember you and I were talking the other day that I was the one when they started talking about transitory inflation back in February, March of last year. I said, that's crap. It's going to be here for a long time. So, I mean, I just realized that everybody's full of crap some days. But here, I was right now just going to show you the pricing. I mean, right now, being a broker, we're at 5.25 is a cost of $756. This is basically I'm giving you kind of the inside scoop on rates. This is 5% down on a $510,000 purchase. So you're looking at this is one of my better lenders, Union Home Mortgage. Their cost of $750 $50 for 5.25. And like I said, I guarantee that some of the retail banks, Jackie, you could probably chime in on this, but some banks are probably 5.75, 5 7/8 on the conventional side.
I've seen 6% actually.
Yep. See, at 6%, I'd be giving them an $8,000 credit.
Mm-hmm.
So that's the difference.
That's perfect credit too.
Patty's got a comment here that says things have really slowed down on my 55 plus park. Is that, Patty, do you think that's seasonal or because I know everybody leaves about the third week of April?
Yeah.
But that's interesting.
Yeah, that's interesting to see. You see rates already at 6%, Jackie. Yeah, because like I said, I'm right now we're about 5.25. So I mean, it's gonna be 5.25 to 6. You're seeing, and you've got. I'm just gonna end it up with this. I mean, we're seeing an interest rate time frame. You can't fight it. I mean, basically, rates are going up. I think just like we saw the period of rates going down from 2020 down to 2021, it's 2 years of it going down. We might be in this for another 6 to 12 months, this rising rate environment. Obviously, if Feds do overshoot, they're going to have to come back down. I think my guess is they're going to shoot 50 to 75 basis points. They're going to throw bombs at the rate, because that way they can put their ammunition back in the gun. If they overshoot it, they can always come back down. But if they go in quarter increments, here, that's like shooting BBs at Russia. I mean, I think they're gonna have to do 50 to 70. I mean, my guesstimate is I bet they come out with a 75 BIP move here, the next move. I wouldn't be surprised by that, because they have no ammunition right now to work with. And they have, like I said, 25. That's gonna be nothing to it. So they're gonna have to hit it hard. And the stuff that I've been reading are going up. People are getting squeezed out on the, just what we and I had been talking about. That's going to knock out that first time home buyer. I'm trying to compete. I'm trying to drop my rate by playing around with the rates. I can do different things. Being a broker, I can, play around with the rate a little bit, but inflation's up. Ukraine. Another thing too, is people got to realize China, we got a China shutdown. There was 440 million people that are being basically just shut down. You got supply chain issues. So everything that I see means rates are going up. and they're going to have to fight it hard.
Well, 6% was supposed to be that magic number that made things grind to a halt. And Smack saying, I heard a stat that the Phoenix market will see 25% appreciation at our current rate. Yes.
Yeah.
What do you think, Jackie?
I think we're going to be somewhere around the 18% mark. We started the year out super strong, 2-3% a month, which is just crazy. But I can see it starting to slow down a little bit. I think it's starting to stabilize, and we need it to stabilize. I mean, it's just gotten out of hand.
Yeah, I think rates.
I would say about 18% is my gut for the year. But that's still astronomical. What were we at? 32% last year?
Yeah. It's interesting that when we look at some of the numbers that have come in, and Pat, let's see, Patty, you're saying there, many moved in from California. Houses were selling before even listing in a week or two. In 1 week now, very slow. 1 week is not slow, but compared to where we were, it probably seems like we're just grinding to a halt. So when we jump and look at the Cromford data, one of the things that we see here is that everything's turning red. So the as far as being in favor for sellers, is starting to turn the other way. But I mean, look at this Cromford index in Avondale. It's still 544, and everything over 100 is considered a seller's market. So that's a long journey. But he does make the comment here. I know it's hard to read for people because most of you are watching on your phone, but it said, this doesn't mean the market's cool. In Phoenix, for example, the reading at 435 means there's more than 4 buyers for every home available for sale. So when you see a number like 400, that's 4 to 1, right? Even in Buckeye, the bottom ranked city, there's more than 2 buyers for every home for sale. For prices to go down, we need more sellers than buyers. If we had twice the number of homes for sale and half the current demand, conditions would be right for a balanced market. Now, they go on to say, well, where are we going to get these homes? And what he says is that we're probably not going to get them from what you and I talked about this morning, Pat. We're not going to get them from, your neighbor putting the house on the market. We're going to get them from all of these institutional investors and mom and pop landlords, because we're starting to see some evidence of rent getting a little bit, we're going to start seeing first month free and stuff. We're starting to see that in Gilbert. Tom says, I have buyers still going 15,000 over appraisal, and we're still not winning the bid in Buckeye. Rate will deter sellers to list just because they're in a great current rate. Yeah,
that's exactly right.
So. Daniel, I don't know how Cromford Index is calculated. They keep that pretty close to the vest, but it shows us it's been pretty accurate for years. It's showing us that it's starting to turn down, and supply is kind of flat. And demand is, coming back down, but here's 100 right there, right? So demand's coming down. Now, when I did a 7-day moving average, one of the things I look at, that green line, that's the lowest number of contracts over 7 days we've ever written, which is 2,700. I think that was 2008. So, so will that keep inventory low? I'm not sure what he's referring about. Oh yeah, the rates will deter people from putting their home on the market. Yeah, I think everybody's sitting on their hands, don't you guys?
Yeah, I mean, like you and I. Oh, sorry, Jack. I mean, I think like you and I talked about. My people that got in 51. There's 51%. What was that number? 51% of the homeowners have a rate below 4%, and it says so. It says 10. It's right here. Right there's this comment I saw. So tens of millions of people likely will not be moving anytime soon because now you got such a gap between 5.5%, 6% on the current rate. If somebody's sitting at 3, yeah, okay, they bought, like, once again, I've heard me say this a million times, but they bought a house for $250,000. Now it's worth $550,000. They got $300,000 equity. Yeah, they take that $300,000, but now they're got to buy a $700,000 house, really, if they want to upgrade, and you got a $400,000 balance at 6%. So,
hey, Jordan,
we got what we had in 2018 when we saw rates go up. We saw a totally different thing where rates, obviously people could still trade out. We don't have that velocity of turnover now with people buying up, because now rates are just, I think rates have really have dislodged that, that velocity.
Yeah, Jackie, you specialize in Scottsdale horse properties. So is
All
that
over the valley.
yeah, you're all, I mean, we're all everywhere, but you do a lot of business up there on those horse properties. Are you seeing any changes there?
I'm not. That's still strong, which is strange because for a long time the horse market itself was gone. It had just bottomed out, and that's just come back super strong. I think, in my opinion, back to what you guys were talking about before, I think what's going to happen, and where I see the biggest changes coming, is as the rents are starting to stabilize and we're not getting those increases. And I think it's area specific. So, there's certain areas that they've really built a lot of apartment buildings. Investors have bought heavily, and you're seeing a lot of single family homes coming up for rent. And those rents seem like they're stabilizing a little bit. And I think as that happens, and I don't know what the percentage is, Rick, anymore. You probably know much better. But I think those institutional institutional buyers are going to start to back off. And then hopefully that's going to pick up some inventory. But, I think we're going to still stay super strong because we got so much demand, so many corporations coming here. The buyer demand does not, even though it's weakening some because of the interest rates, we still have so many people moving here. And I think that's going to continue.
I think the difference between now and '08, and to answer your question, the investor percentage of the market was knocking on 30%, and they're going to be faced with these rising rates of saying, I now have another place to park my money. So maybe owning rental properties that comes along with the expenses of holding it. Maybe I'm just better getting my 3.5% in something else instead of doing rental markets. Do Vegas here wants us to start $1,000 pool to guess the date of the balanced market. I'll just bet with Pat, and we usually use
but that's kind of like saying, the balanced market trying to figure out the equal rights. I always tell my buddy of mine, equal rights, and they never ring a bell when equal rights equals equal rights. So they just keep going. So,
well, I think that we'll definitely see people start walking away from their rentals. But I think the difference, I was going to say, between now and 2008, in 2007, there was nobody sitting around saying, boy, as soon as the house prices go down, I'm getting in, especially after 2008 when it crashed. Nobody got in because a lot of people were just financially devastated. But it's interesting now that if, let's say, we get it 6.5% and the market levels off and it starts slowing down and then rates start coming down, don't you think there's just going to be this wave of people that jump back in?
Absolutely.
So I think it's going to stay strong for a long time. Now, there's certainly could be a lot of hiccups, but I think in where you were doing those horse properties, that's probably such a different niche that maybe they're not affected by rates and general demographic moves.
Most of them pay cash. Huh?
You're still seeing a lot of cash.
That leads into a point that Rick and I were talking about. I mean, I'm just going to touch upon this real quick. Rick and I were talking about this. You see a lot of people paying cash, right? $1.5 million property, pay cash. Do you think that's the proper strategy?
No.
Because I don't think so either, because I'm going to pay cash. That's the safest way to go. Well, Mr. Jones, you put $1.5 million cash into a house and the market goes down 20%. You just lost $300,000 hard money. Now, if you take $1.5 million house and you put, say, half, $700,000 down, you got $700,000 in the market. You leverage. I mean, I'm advocating to get loans. That's why I'm saying this. I'm selfish. So, but I mean,
but I think it makes more financial sense too, though.
Yeah,
because I mean, not just the risk that the house goes down and you're actually losing a hard asset, but
yeah,
I get it that there's comfort in coming over from California and being able to pay cash.
Yeah,
and do that. But there's on the side. I mean, instead of paying $1 million for that house, pay $1 million and then do something else with that other $400,000.
Yeah,
and we're not seeing a lot of that, probably because they think that if they don't shoot the whole wallet at the 1.4 and pay total cash, that nobody's interested in their offer.
Is that
Well, I
maybe.
agree with that, and there were clients I was actually trying to talk them out of paying cash, especially when the interest rates were 2.75%, 3%. It's like,
yeah,
why would you not use that money leverage, invest in more real estate if you want
yeah.
to?
Well, people can pay cash with, like I got the product. I know you probably heard of it, the delayed financing, where people can pay cash for a house, but then they can turn around next week and pull cash out. I think that's the best strategy because, I mean, like I said, and Rick and I were talking about it. I was going through a listing of all these people, the 1.5 and below. I was just kind of searching. All these people are paying cash, 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 cash. I'm like, it's amazing how many people, and I get it. A lot of these wealthier clients might have LLCs. They got more complicated, they don't want to deal with the mortgage process per se. One thing is don't deal with it now, but then wait a week after you close, and then you can deal with it after you close. Like, okay, we got time to refinance. But it's amazing to me how many people pay cash when I just think in this market, at the top of the market, if you think things are going to slide, why would you be paying cash for it? It's just kind of interesting. Him and I were talking about that this week.
Yeah, Danielle, probably not. He hates real estate agents. So,
Yeah.
yeah, but I'm saying this, but because I don't have 1.4 million to plop down in a house. Pat, you've got a safe back behind there, so I know you've got all that.
Yeah.
It's under that football.
Yeah.
Over there.
That's
And,
right over there. Yeah.
And then you've got gold behind the bobblehead. So not everybody's.
Yeah.
Not everybody's like you, Pat. But
Yeah.
do Vegas, the
Yeah.
1.3 cash buyer probably worth 8-10 million. Maybe.
Yeah, true. Yeah. I mean, I don't think
Maybe.
everybody is, but I don't know if everybody is, but I would say that, they've got more money in the bank than, 8 to 10 million might be a good, but I don't know if every one of those has got 8 to 10 million. I mean,
I think the people in California just bringing their equity over and going, I can finally get into a house and I don't have a house payment. That's been my lifelong goal. That's where I'm going.
So that goes to say, I mean, just jump in here quick. You know me, always jumping around, but I mean, people
I
say
can always mute you.
Markets, huh?
I can always mute you.
Oh yeah, true. But the market, the people say market's going to crash. Well, that guy that paid 1.5 million for a house, if the market crashes, okay, his equity, he goes from 1.5 down to 1.1 or 1.2. Yeah, okay, he's a little, but and if he sells, he takes a loss. Not anything anybody else. So it's kind of interesting. And then people talk once again, a point that I came up, I was talking to somebody about they said the market's going to crash. Remember you and I were talking about the fact there's like $6 trillion worth of equity.
Yeah.
I think it's like we did not have $6 trillion worth of equity back in 07, 08. We did not. Bottom line is. So.
Well, Jackie, I wasn't selling real estate back in 06 and 07. I was still in the bread business, but I was sitting there at my house and I'm looking at the numbers in Arizona. And the one thing that jumped out to me was there are more homes being built than were moving into Arizona.
Yep.
And,
Yep.
I remember, congratulations as well.
That's my nephew.
What's that?
Oh
And
God.
That's your nephew?
So,
oh my God, Jackie hit on. She's calling relatives now. We should have done that, Rick, to get our viewership up.
hey, this is hard enough for me because I don't even have friends, let alone relatives.
Yeah.
So, but 2006, I remember sitting there looking at it, and I was contemplating putting my house on the market, which I did. And it was a big 5-bedroom home in Chandler. And I was sitting there with my son, who was, I think Kevin was 16. And I was talking to my dad, and he was a real estate broker up in Washington State. And Kevin goes, "What are you thinking about, Dad?" And I go, "Well, the house prices are going up, and the fundamentals don't make sense." And I said, "I don't know whether to sell now or wait." And he goes, "Well, what happens if you wait?" And I said, "Well, because the party might be over. Houses will start going down, but I don't know when." He goes, "Well, but what do you know now? You know now that you have your house is worth more, right?" And he goes, "Yeah." And he said, "Well, do what you know." And I thought, that's pretty wise for 16.
It was.
Instead of trying to pick the peak of the market, he goes, "Do what you know."
You can only act on what you know today.
Yeah, there's no way, no figuring that out.
Well, that's what,
Daniel, what age did you get your license? Are you asking me or Jackie? Because Jackie got hers when she was 10.
Right.
But that goes with that thing goes with my rates. I was talking about people say, where are rates going to go? Lock in today at 5.5. If they go higher, if they go to 8, you look like a hero. If they go from 5.5 down to 3.5, you can refinance. So you're not stuck. But you have to do whatever you're doing it today. So
I got my license, I think, at 59.
Yeah.
Is when I did it. And so
hey, can I jump in?
And I'm this old now.
Yeah.
I'm 60. Yeah, go ahead, Pat.
Yeah, and the lending news, real quick. There was some news that the medical collections. I mean, make a long story short, they're Experian, Equifax, and Equifax and TransUnion will not be reporting medical collections starting in July on their credit reports. So they're basically gonna start taking medical collections, which is gonna help a lot. So that's gonna be huge.
I thought they had done that a while back, hadn't?
Nah, they were talking about it. They were talking about it. Yeah. So, but yeah, that should be good news.
We could use some good news.
Yeah.
I really want, and for those that watch the channel here, I just want some balance.
Yeah.
Yeah.
Sure.
There's nothing more frustrating than going out and, I was helping a young man in a condo, and there were 3 condos where he said, yeah, I'm off at 4:30 today. We can go look at it. And at 3, already under contract. Couldn't even get in the car and go look at it. So now he's priced out. The price has gone up. The rate's gone up. He wasn't making a lot of money, but he could get into a condo. Now he can't.
Yeah.
So he's gonna wait it out. And I think that's
Jackie, what's your take? What's your overall agent that's been in business 30 years? On the balance, on your general.
Well, so
give me your 20-second.
Yeah. So 5% to me, when I started in this business, it was double-digit interest rates. Yeah. Unfortunately, it's just we're combating prices going up so fast, as well as the rising interest rates. I think when we start to see some balance in the market, and I don't believe that interest rates are going to stay here forever. And I agree with you, Pat. We might get up to 6.5, maybe 6 3/4. But I'm still encouraging people to buy, and I'm telling them the same thing that you're telling them. If interest rates go down, that's fantastic. But I'm trying to educate people too in the fact that 6%, even 5%, it's not a bad interest rate. We had parties when it went to single digit. So,
yeah,
it's a strong market. Phoenix is going to continue to stay a strong market. There's so much happening here. I have no fear about Phoenix. In 2006, 2007, you knew the party was coming to an end.
Oh yeah.
Yes.
And it was horrific. I remember once we crashed, I was working with Dan Valentine, who worked with a lot of Canadian investors. There was a point where we were buying 2,500 square foot homes in Buckeye for $65,000.
Oh yeah.
It was complete insanity.
Maricopa.
But it's just this is a completely different market. When people try to compare it to 2006 through 2008, it makes no sense to me. So
no.
I still think we're strong. I think we're going to continue to stay strong, and hopefully the prices stabilize a little bit so that it doesn't kick more buyers out. Unfortunately, Pat, do you think they're going to do something with maybe the 40-year mortgage?
Oh yeah. Oh, they have already. It's not there is one product, there is one lender came out with 40-year mortgage. I think FHA is doing it from a FHA modification standpoint. They're doing that, but I think you will. But they will do it. Some lenders will do it, but it doesn't really change your payment all that much. I think I was playing around with the numbers, and I saw something. I think they will, but it'll never be a qualified conventional mortgage. It'll be like a non-qualified, non-QM versus QM. QM means conventional, like Fannie Mae, Freddie Mac. Non-QM means you're out of the box, so they will have that.
And is it true that, because I've heard talk about the first 10 years being interest only?
Yeah. So you usually have they have a funky, I've seen it. Yeah. They usually have like an interest only component to it. So, I haven't seen the guts of one, but yeah, they're usually like an interest only first 5 or 10 years interest only. So
And according to the Cromford report in new construction, we're seeing a lot of developments first that they're starting to put in escalation clauses because it's going to take you almost 14 months to get your home built. So you're paying a 550 base price, but if it's, a year from now, it may be 575. And so they're building in these wonderful escalation clauses. And then for real estate agents, you could just about forget escorting your client to a builder and getting a commission. Lennar Homes, all of their developments, no commission for real estate agents.
Yeah. I'm starting to see a few offer it again, but it's still tough.
That'll come around and change. And of course, we could have a live stream on commissions and last us an hour, and then it would completely bore the audience, but you and I would feel better.
yeah.
Terry, I recently looked at my HELOC rate and it's still 4.375. I was surprised. I'm sure a hike is coming to a place near you soon, Terry. I just I don't know what.
Well, that's the prime rate. That's the federal fund rate and the prime rate are different. So that usually goes off the prime rate. So that's their prime rate, the federal fund rate, 10-year treasury. So it might be tied into a different index. Sometimes HELOCs are.
Yeah, I think as we're looking forward, this right now is supposed to be our peak market, and so it's been kind of slapped on the side of the head. So
I'm seeing a shakeup in my end. I tell you, I'm seeing some weird stuff on my end. I told you there was a lender, PCF, that's getting out of wholesale. I mean, I called you the other day, right?
Yeah.
PCF is getting out of wholesale. I'm just seeing different stuff from I'm going to see different stuff than you guys are. I'm seeing wholesale lenders get out. I'm seeing, the LOs, more LOs crying, the LOs that got into the business the last 1 or 2 or 3 years that were crushing it.
Pat and I hate that term.
I hate that term. I hate that term.
That was my New Year's resolution for this year was not that I wasn't going to say crushing it. I just don't want to hear it anymore.
I hate, it's just it's like fingernails on a chalkboard with me. I'm crushing it. It's like,
right.
I mean, I could be doing, 5 loans and then all of a sudden I go to 10 loans. I'm crushing it. And I get an LO, in our office that's doing 30 loans a month. It's like, yeah, whatever. But, but I'm seeing different stuff. LOs getting out of the business, crying, I belong to this new loan officer, Facebook page, and they're like, oh my God, I got to get out. I can't find anything, So the reason I bring it up is I'm seeing the shake, the thing is not going up like this. There's cracks in the, with rates going up. And that's why if rates go up to 6.5 or 7, it's going to, I'm taking I started kind of taking a different approach. Like, you know what, maybe, this slap is not good to people buying a home, but this is probably what maybe people have to look at it a different way and say, hey, this is what maybe is going to shake the fruit off the trees a little bit. Cause we were clipping along for a year and a half, 2 years, Rick, you and I, 4,100 homes, 4,200 homes, 4,300 homes, and this is what the market, you always need something to shake up that supply demand equation. And, I started kind of looking at it a different way, instead of getting ticked off that rates went from 3.25 to 5.5, or, a little bit lower for me, but it's going to shake that fruit off the tree that everybody just clipping along. It's going to make people stop and think. So maybe it is a good thing, but I'm starting to see little cracks. Like I said, some lenders getting out of wholesale, LOs getting out. I'm seeing realtors like, I feel bad for realtors. It's tough. It's not an easy gig.
Well, Richard said, how can median income people afford this? And Rex says they can't. But that's part of the market balances. You reach a point where, the average buyer can no longer participate, then the market has to adjust. And the only thing that's keeping it from adjusting right now is the investor traffic. And with rates really low, it's really easy for Wall Street to come in and buy all these homes because money's dirt cheap. When that changes, that will change. And then prices will stabilize, wages will start to increase. They may start going up like crazy. Who knows? I'm not an economist, but I did stay at a Holiday Inn Express once. And so I think eventually things ought to to balance out. Terry says recruit Pat for success lending. Must be an inside joke there. I got the so I don't know. I think this summer is going to be interesting because people like to put their homes on the market in May and June in this market because most of our schools start at the end of July. Now with the schools all out of whack now, I don't know when they start and when they stop. I don't even know what spring break or fall break is anymore. So, but I think that summer is anybody's guess. It all depends on the rate. The Feds are already talking about a half point, 50 basis point move again, but they keep saying that so much that, it has no impact now. It's like they could come out tomorrow and say 200 point and you go, yeah, whatever.
Yeah.
Yeah.
Matt brought up the fact that they're starting to sell off the balance sheet. Won't wait till the Fed starts selling off. They're not, I mean, they're just going to let stuff roll off. I mean, they're like Barry Habib says that actually one of the things that they're tapering down. I'm starting to follow the Fed Reserve purchases. I'm starting to save the data to find out. I'm going to start putting some data together, figure out where they're at with the
I should know that.
The data as far as the Feds. But Barry Habib thinks that since there's going to be less origination of loans, that's going to be less supply for the Feds to play with in MBS. So that's going to help. They don't have to suck that up. But that is going to be something to look at as far as when the Feds start pulling back. I think that's what the MBS, the mortgage-backed security market, is going to be much more volatile than the 10-year Treasury. So,
yeah, we'll see what happens. So I think let's see. Here's a comment here, and then we're gonna go ahead and jolt here. I'm seeing more homes for sale in North Mesa, but they're getting picked up pretty quickly, at least in my neighborhood. Yeah, well, the nice neighborhoods are not slowing down. Over 55 that I look at too for people is there's no bidding wars going on in there. I mean, there's some. I don't know, Jackie, have you dealt in over 55s at all?
Well, not that much. My office manager was talking about a listing she had in a 55 community in Sun City. And she said where normally she would have got 15 to 20 offers. I think she said she got 3. But throughout the entire time of the last 2 years, it never really got crazy. And I think that's because they weren't traveling. They didn't want to move. So it might have increased, demand might have increased a little bit, or maybe it was just lack of supply more. But I don't think the 55 community ever really seemed to get that out of control.
Well, I think it's because that age group says, I ain't playing in that sandbox.
Yeah. They're not going to play that game of like, oh, bring me 30 or 40 different bids and I'm going to have this 2-hour circus and have all these buyers come in. They're probably like, no, I want 3 people coming in the house. Give me 3 bids and that's it.
Now, the Cromford report did make a mention of the increase in the number of coming soon listings that showed up. We jumped from like 750 to 1,200. And I don't think that's an indicator of anything. Jackie, do you think that's what's that?
Are they mostly one company? Because I think their tactics changed again.
I tried to look at that. I couldn't sort it. I wanted to sort to see if it was the 3-day people. Yeah. But I'm saying that it's actually made up of three major brokerages. And so I think, because I call them the 3-day people, because they started doing it and they're still doing it a lot, that other people are thinking, well, I'm going to try it. So I don't think it's a number that indicates anything changing in the dynamics of real estate. I just think it's gimmicky. Yeah. And so
right now, but it literally was, just because it wasn't ready to be shown. But I agree. I think there's a lot of people starting to use the gimmick again.
Yeah, I've got one coming up in Scottsdale, and they're going to be getting ready by doing some exterior painting and some other things. And I said, I may throw it as a coming soon, but just so that people can know it's coming. I'm not going to do coming soon. You can only see it for 2 hours on Saturday. And I'm not going to hold an open house in it because I don't like holding open houses when people live there. I heard a realtor say we might see 25% this time next year in the Phoenix area. You guys agree? If I had a dime for every realtor guess, I'd be in that $1.4 million house. You'll hear 25, you'll hear down 40, you'll hear, look, as real estate agents, all we could do is look at today's data, what's happening, what's changing, and what does that mean the next 2 or 3 months out. As we stated earlier, we look at the projections that were out there for 2022 by all the big hitters, Zillow, Redfin, Realtor.com, CoreLogic, and so far none of them have been right, even on the interest rates. And I think Zillow says nationally 16.6. They didn't hit it last year. I don't expect them to be right this year. So, and I don't try to, really how much your house is going to go up in value this year doesn't mean anything to me.
Well, Rick, can I say something? So I stumbled across your show 2 years ago, and maybe a year and a half ago. I take that back. And even in the business, as long as I've been in the business, I have tried to watch your show every day possible. And that's why I think you need to get back to the morning. It was an easy way for me to
I have a comment on that.
I was easy way for me to sign on, get a quick grasp, because it's all you can do is watch the numbers every day, and they're going to tell the story. Other than that, we'll never know when we're at the top and about to go down. You don't know it until it's already happened.
What's my favorite saying?
Yeah, you can't ring. Nobody rings the bell.
Right.
Yeah, I think now to the morning show, I'm going on the morning show. Just let everybody know what I was doing was I cut it back to like 2, maybe 3 days a week, just because there was none of the numbers were changing. So I didn't want to get on and go, hey, it's Tuesday. The numbers are the same as Monday. Take on the day. So there was nothing. But now there's a lot of stuff going on, but I was taking the morning videos and I was setting them to private, and then later on in the afternoon uploading them, because YouTube looks at live streams like this differently than an upload. And when you upload it later and you kind of change the thumbnail and the title, it gets in front of more people and you reach a newer audience. But what I found is it was confusing the living daylights out of my core audience. There's again, Rick, I got on at 9:30, you were gone. I've had some people help me with the channel. And I said, I'm going back to mornings, and then I'll supplement it with uploads. So you may end up seeing too much of me, but I think it helps you get grounded in the numbers. I mean, I know that this audience knows that 6,000 homes is higher than it's been all year.
Yeah.
Not because we told them, it's just that, we can just say
that was the work the last 2 years of us watching the numbers. Because if we were to just pop down and said, oh, there's 6,000 homes on the market, you wouldn't know from your butthead, or you wouldn't know what that number meant. We'd know that now it went from 45, 46 to 6. There's something going on. So it's nice to
So to answer Mr. Fuller here, is the ice cracking? Yes, in some segments it's cracking, especially the rental market.
But,
and the rental market's cracking. That could get us some more inventory. And the whole market right now, I think, is nervous. And you can hear it, like you were talking about lenders. You can just hear that shift and that worry. And I think, we're walking onto the lake gingerly.
Yeah. But it's not enough. I mean, people are saying, oh, we're in for a crash. It's not going to be a crash. I mean, if anything, we might see a reset. If anything, if it slows down a little bit, it's going to give the first time home buyer, it's going to give that guy who wants to buy a house an opportunity to buy a house versus going against 10 or 15 offers. He might be able to pick up a house. I would use this as an opportunity to entry point, and not like, oh, I'm going to wait till it settles down. You are not ever going to get somebody to call you and say, Pat, the market settled down. Go ahead and buy a house now.
Yeah, today's the day.
Yeah, today's the day. It's just, that's crap. So just people have to be smart about it. They have to look at their own individual situation. Like you and I talked about, everybody's different. Look at your different situation. Because like I said, I think things have slowed down because rates have gone up. Inflation. We're against inflation too, which is really sucks because people are looking at their gas, their food. Like, God, we can't buy a house. Yeah, rates went up. Typically, if rates going up, people could say, okay, yeah, we can still buy a house. But now they're looking at the whole basket of things. They're like, so it's certainly an interesting time frame. But I would use any type of pullback as an entry point.
Yeah, you've probably seen me at the gas station like this.
Yeah.
I've got a Chevy Avalanche truck, and I fill it up to take the travel trailer out, and it just, I cry. I just, they have those speakers out there at the gas station. Go, Rick, it's going to be okay. And, it's just that has to change. It altered my plans. I was planning on leaving just in a couple weeks. I was going to be gone most of the summer, and I was looking for a good referral agent, and so we're going to talk. And but now I'm like, hey, I got to stay here. I've got some business coming in May, and so I may be gone for about 5 weeks at the end of the summer. And I've got this, little dog here that's starting to wake up, and I thought I'd take a long trip, go visit some friends and family and everything. But when I looked at the price of the gas, I thought, that's just insane. I can't do it. With all the multiple offers, sounds like people don't have a problem with affordability in Arizona. They don't have a problem with affordability anywhere. Even in California, homes are selling. In Seattle, I don't get it.
Get it.
How high do mortgage rates need to be to collapse supply demand? What do you think, or buying demand?
I mean, yeah,
and the follow-up question is, do you think it's the only way to get supply back up?
It might hurt supply even more. You may have less people even willing to list.
Well, that's the thing. That's that not because I think we got ourselves in a pickle with rates being low the last 2 years. We never see. That's the problem. I mean, the dynamics of this whole market is blowing me away because we never saw rates at 2.5, 2 3/4 for 2 years. We basically people had all day long. I still getting people like calling like, hey, I want to refi. I'm like, yeah, I talked to you about a year ago and you didn't want to do anything. It's just like people. The idiocy of the fact that people were at 2 3/4, and I've heard this from LOs that people were waiting for rates to go down to 2 1/4. Just blew my mind.
Yeah. Well, we had a comment on this channel, and I'm not beating them up.
Oh,
It was
yeah.
like, I'm at 2.75. When do you think I'll be able to refinance?
Never. Yeah. That's the problem. But see, this is why we're people, the average. I mean, you know me, Rick. I do read this stuff and I try to put together my own economic theory since I have been in econ for the last 30 some years, econ finance. And I've seen with being a stockbroker for 10 years, doing this 22 years, I do have a different call, different sense of stuff. But if you think about, we've never seen a period where for 2 years we saw rates at 2.5 to 2 3/4. So people are basically entrenched. There's like you said, 50, and this stat should not go on. 51% of the homeowners have a rate below 4%. And I don't know. I think it was like 30. Next week I'll pull up the gap because I've got a thing of all the rates. How many people are at? There's like 30 million people that are like 3% or below, or 3.5% and below. Those guys are dug in for most part. Those people are dug in. If rates keep going up, those guys are going to dig in even further. As far as I'm going to stay in my house.
They're not going to move.
They're not going to move. So that's something that we're dealing with that we haven't dealt with in the last 50, 60 years.
Jackie Tyler's asking, are most listings doing open houses or by appointment only? Are appointments filling up the day before?
It depends on the area.
Yeah, when somebody wants to go see a house, that's the first thing I look at is how many appointments have already been made.
Well, how about digging? Maybe we could next week we could dig and say, I mean, not to be what areas are, maybe you can be specific. What areas are filling up and what areas are not? Is that
and price point?
Yeah. I mean, Chandler's still really busy. Gilbert is really busy. We're starting to see Fountain Hills get more inventory and Paradise Valley. But as far as open houses, there just isn't a lot of open house activity. And the reason is, you don't just decide on Friday you're going to do an open house on Saturday. And so if you've listed the home on Friday, you might decide, on Thursday that you're going to do it because you want to post it in the MLS so that it shows up on Zillow, because people will take their phones and go, oh, I wonder where the open houses are today. And they'll look. And so you want them to be able to find it on Zillow and Redfin. But then lo and behold, Saturday morning, the house is under contract. So I kind of stopped doing open houses for that reason. COVID killed them anyway, but then they started moving so quickly. It's like, you couldn't even schedule one. I'm going to do an open house this Saturday. Oh, well, Saturday morning, the house is already in contract. So, and there's nothing worse than doing an open house. Go, welcome, look around. It's already sold. Want my card? So, well, gang, thanks for being on, Jackie. Thanks for joining us. You're our first guest, and I hope you enjoyed it, had a good time, and we will have you back.
Well,
then-
you and I will talk about that next week, Rick, about having her back. We'll see.
Yeah,
We'll vote on it.
We'll have a little.
It'd be a 1-1 vote. What do we do for a tiebreaker?
I'll ask my middle son. So, but
I
and then
enjoyed it, guys. Thank you.
and
Yeah,
we
thank you for
need to
coming.
talk to you about getting your own YouTube channel up and running. So
I
I'll
would
build it
love
for you. So
Awesome. Thank you.
all right, guys. Talk to you soon. Have a super weekend.
Take care.
Bye.
Bye-bye.